Welcome back to The Big Perspective, where we talk to some of the smartest minds in the Indian markets and pick their brains about the biggest trends shaping our stock markets. I'm your host, Bhavya Dua. A lot has been happening in the markets. Some sectors have seen crazy rallies. There have also been valuation concerns in the markets. The domestic and global economy have seen some interesting times post the COVID. To cut it short, there's been a lot of enthusiasm and excitement around us. And to make sense of it, we spoke to Ashish Gupta, Chief Investment Officer of Axis AMC. So we'll start with talking about the markets right now. So markets have been doing phenomenally well, right? So it's been 8 years of positive returns. We're in 2024, it's the ninth year, positive so far, right? So if you look at the big picture of the markets at this point, how are you feeling?
At times like this, you have to really guard against complacency. I think one has to be very clear that markets are always going to be cyclical. Markets are not going to be unidimensional one way. The fact that market has not given a negative return for the last 8 years does not mean that every year, even in the future, it will give positive return itself. So I think we should guard against this complacency. I think particularly for new investors that have come in the market over the past few years, they have not witnessed these cycles, right? So I think they should be also cognizant of these facts, look at longer term histories. For example, when we look to hire analysts in our research team, right? One of the prerequisites I look at anyone tracking the industry that has he seen a cycle in the industry, right? So if you have only seen an upswing in the industry, or if you have seen only a downswing in the industry, then you can't really appreciate what can potentially be the future. So I think same hold true for the investors as well. And I think they should look at last 15, 20 years, what has led to market cycles, if market has corrected in the past, what it has been. Has it been valuation? Has it been growth? Has it been liquidity? So there are multiple factors at play.
So again, when we talk about these flows, the selling in the market, we talk about IPOs, we talk about stake sales which are flooding the market. These normally happen at the peak of a market cycle, right? And again, as you pointed it out, is not considered very negative, is not considered very positive, is rather considered negative, right? So why is this rush to sell there in the market currently?
Oh, I think it is just a reflection of the valuation. So, for example, if you look at MNCs which are selling their stakes or IPOing their Indian subsidiaries, the Indian businesses being valued at P's which are 4 times the P the parent is trading at. So if the parent in Europe is trading at 20 times earnings, the Indian business is being valued at 80 times earnings, right? Or if this auto company is trading in its home market at 6 times earning, it can list its Indian business and take out some cash at 25 times earnings. So from a capital management point of view, clearly this seems advantageous to them. It is similar to what happens when market multiples are low. That time companies and promoters look to buy back their stock. So this is really the inverse of it.
Right. So more often than not, the buyers on the other end of this huge offloading are majorly the domestic mutual funds or the retail investors. So are they getting the bad end of this deal here?
So I think it's a free market. As I said, conversely, you may look at it that if so much buying was there and if these sellers were not there, then buyers would have had to pay even a higher premium for it. Right. So I think everyone is an adult in the market. So people are taking that risk very knowingly. And only time will tell who got a good deal.
But surely this is a trend which is worrying, right? It's a red flag in the market right now.
Yes, and I think it also should give us a cue that just because there are certain inflows into the market, right? Just because there is some money from insurance and pension and mutual fund which will continue to come into the market does not mean that market will only go up, because there will sellers will also respond